I've had two managed portfolios with InvestEngine on the go now for about a year, and in this video I wanted to have a look at how they've performed over the last year and see if it's actually been worthwhile putting money in there.
Here comes the money!
Here we go!
Is it better to leave the management of your investments to someone else?
But if you can make a client's money at the same time, it's advantageous to everyone, correct?
No.
Or do you simply not trust anyone else to look after it? A Twitter poll that I recently fired out voted overwhelmingly against managed portfolios, saying that they cannot be more effective than looking after your own investments. Hold on to that thought as we go through this video. InvestEngine has been rightly lauded for their completely free platform, which allows you to build your own portfolio from over 500 ETFs with absolutely no fees, nothing to pay in terms of deposits, withdrawals, any kind of transactions. It's quite brilliant really. Of course, how long this can last is an entirely different conversation. We've already seen what's been happening with free trade, for example, but for right now, it's entirely free, and that's where I have my ISA this year too. But away from their completely free offering, the other service they offer is a managed portfolio. So for their trouble, they are taking a fee of 0.25%. Not completely free, but still pretty competitive in today's markets. So it's not free. And since InvestEngine already offer a free pathway, what exactly are you going to be getting for your 0.25%? And why would you even want a managed portfolio at all? Well, first and foremost, it's to take away all the mental load away from you for your long-term investing. InvestEngine's managed portfolio is just a way you can simply just deposit all your money into your account and let InvestEngine look after you via some ready-made portfolios. Now, I made a video some time back about what's involved in getting all that set up, and to save me from repeating myself in this video, I'll just leave a little link to that video in the description below. You can check that one out when you're done here. The idea with the managed portfolio is that you're paying someone that should have more investment savvy than you to make good decisions on your behalf. There's no hands-on required from you, no charts, no jargon, and that's just for starters. Of course, anytime you wanted to change that plan, you can do that. You aren't tied into anything here. There's no contracts or anything like that. On top of that, InvestEngine will diversify your investments for you appropriately, spreading your risk and hopefully taking away some of the wild swings that we've seen lately, and all being well, sending you on a nice upward trajectory over the long term. So to set the scene and explain what's going on here, I have two managed portfolios with InvestEngine since the 21st of July right up to this present day, and to see how they have performed over the first year, I have added nothing to these accounts since they were open. It's a very straightforward calculation from here as to how they've done. I have my ISA, of course, with InvestEngine as well, but that is entirely self-managed, entirely separate, and will not be going into that today. Regular viewers are going to know that I am a long-term investor, so today we are going to look at my Growth 10 portfolio. It's one of the pre-made ones that InvestEngine are offering. It's about 89% stocks, 5% bonds, 5% gold, and a wee bit of leftovers. This is pretty close to investing fully in the stock market. So on the 21st of July 2021, I dropped about 636 quid into this managed account, and on the 21st of July 2022, it now stands at about £577. Overall, we are looking at a loss of about 9.22%. So at first glance, it's not great, but we need to remind ourselves that the world as a whole has been struggling since the turn of the year. So it's worth probably checking out how this has performed versus a couple of the larger index trackers that there are out there. Everything's relative after all. But just before we go any further, it's important to note that whoever is doing the investing, whether it's you or someone else for you, there is no silver bullet for success. Investments of any description can go up and they can go down. It's important to understand that every investment carries risk, and while InvestEngine are both regulated by the FCA and they take part in the FSCS scheme, they don't have a crystal ball. Nobody knows for sure where stock markets are going to go, and InvestEngine are absolutely no different. Anyone who claims they know what's going to happen is bluffing. That's a fact.
The Beatles' breakup in 1970 was the sign of a market bottom.
Alright, so I had to eat a 9.22% loss for that 12 months, but what would investing just simply in the S&P 500 have done? On the 21st of July, VUSA, which is Vanguard's S&P 500 tracker, was valued at about £60.14, and 1 year later it was £62.88p, which is a gain of about 4.05%. So at first glance, it doesn't look like this particular offering from InvestEngine's managed portfolio is really cutting it. But there's always more to this stuff than meets the eye. Cast your mind back to the 11th of January, VUSA had touched over just $67 a share and life was good. The Moon Boys were having a great time. The investors could do no wrong, enjoying a run when you could probably have thrown a dart at a board of assets and come up with a winner. But unfortunately, the next day started a decline that would see the S&P lose over 20% over the next 6 months. 21% to be exact. By contrast, my managed portfolio in the same time fell from about £670 down to £543 in the same sort of time period up to about the 21st of June, and that was a loss of only 18.9%. Only, but the feat wasn't quite so brutal doing it this way. The point I'm really trying to make is that you could look at any particular time period and spin things however you want. At some point, an investment is going to be better than some other kind of investment, and we'll have to appreciate that that's just the way it's going to go sometimes. And talking about time periods is interesting because this brings us on to something that these offerings from InvestEngine don't have, and that's a history. They haven't really been going long enough really to get any sort of real long-term results. There's really no performance history to speak of. That said, there are no two investments are the same, and different assets will be affected in different ways by different things. So you need to make sure you're not going comparing apples with oranges. The S&P is of course hugely US focused, and glancing down what is actually in my InvestEngine Managed Portfolio, I can see that only about 30% of this portfolio comes from the S&P in the form of an X-Trackers product. So what else is in here? A European tracker. How has InvestEngine Growth 10 compared against that? Well, VERX, which is Vanguard's offering for Europe, excluding the UK, decreased in value by just a shade over 11%. And that's worse than our managed portfolio. Yikes. But it just reinforces what I said about no two investments being the same. I would think most investors would agree that diversification is important. It stops you being overexposed to any one singular asset or geography, and should in theory at least be a smoother ride as one invests for the long term. The world as a whole though has struggled, particularly in the last 6 months, and I think our portfolio here with InvestEngine reflects that. In some ways it could even be interpreted as being okay. I would expect when the prosperity of this big rock we're all living on turns around, then so too will this particular managed portfolio. But again, nobody knows for sure. The results for this first year investing in this way weren't great for me. You can't really sugarcoat that, but InvestEngine have lots and lots of managed portfolios that you can tailor to your particular needs. After all, only hindsight is 20/20, and again, nobody really knows what's coming down the line. When it comes to your investing, all you can do is make the best decisions you can with the information that you have in front of you at the time. Hold on to your niggers, and if in doubt, zoom out. If you don't fancy managed portfolios, InvestEngine is still currently the cheapest way to invest in ETFs. It's how I'm using my stocks and shares ISA allowance for this particular tax year. It's a totally free platform, very much geared towards long-term investing, and you can get yourself a free £25 when you invest at least £100 for 12 months when you use my link in the description below to sign up. And if you're interested in seeing exactly how I have set up my ISA, then you're going to need to check this video out here.